guys, James here, and I wanted to talk a little bit today on receiving payments in QuickBooks Online and best practices there. I'm sure many of y'all have done this before, but it's always great for a good refresher, or for those of y'all that are new, I'm going to go over some things to look out for. So when we're receiving payments in QuickBooks Online, we're going to choose the customer that we're receiving payment for, and that's actually going to give us a list of invoices available to be paid. So right here under myself, I've got an invoice ready to be paid that I can select. That'll give us the exact amount. Now, if that customer for some reason overpaid, we're going to want to change this amount received to $300. Let's say he paid us $300 instead of $270. We're going to change it to $300. What that is going to do is it's going to give us the ability to record that we still owe that customer $30 either for future services, or if they paid by tip, we're going to want to edit this invoice first for tips. So what I like to do here is come in here to invoice 1016 before we even receive the payment. And we're going to go ahead, we got this in here for a discount, but we're going to go ahead and add a tip in here. For $30. That way it brings us to a total $300, and that is not taxable, so let's make sure that that's not there. So we're going to save that, and now that we've done that, we'll go ahead and receive payment. So now that we can go ahead and receive payment, we can receive the full amount for $300, and it's not going to leave anything for us to pay the customer. Now, if that customer overpays, and we've got $30 that we do owe them, then we do want to keep track of that so that we can apply it in future for that customer. Beyond that, we're going to choose our payment method over here. So whether they paid by cash, check, or credit card. If they paid by cash, we're just going to choose cash. There's not really any way to track cash other than by saying that it was cash. If they pay by check, we're going to choose check, and we're going to go ahead and put in the check number. So maybe we've got a check number by that, and that will allow us to associate this payment with that check in future. If they pay by credit card, more than likely you're going to be using an outside credit card processor. So by using that outside credit card processor, you might be given like a reference number on the transaction or something like that that you want to apply in here just so that you're tracking it and keeping track of everything. I'm going to say that we're paying by check. The next thing to keep in mind here is this deposit to. Now, a best practice is to have it always go to undeposited funds. The reason we want to do that is if you pay by check or cash or credit card, however, most of the time you're not going to be immediately depositing that money into the bank. So you're going to wait until the end of the day, and maybe you get cash from 5 or 6 other customers or checks from 5 or 6 other customers. Or if you're paying by credit card, it's going to batch deposit everything on certain days and may have multiple credit card payments on certain days. So if we don't deposit to undeposited funds, what's going to happen if we choose our checking account will be that it creates a payment or a deposit for each and every payment received. It's deposited individually into your bank account, even though you might have deposited 10 checks altogether. So at the end of the month, when we go to reconcile, when we go to check everything out and make sure everything's matching up, we're going to run into an issue where we're missing a bank deposit, a bank transaction that does not add up to what we have. Now, obviously, you can select all those payments and it'll add up, but that's not what we want to have happen. We want to reflect exactly what you did in that bank with what is in QuickBooks. So we want it to go to undeposited funds so that we can go ahead and make the bank deposit. So we go ahead and do that, and we'll go to bank deposit here, and we'll choose all of these payments that are going in. So let's say we're going to the bank today and we're depositing all 3 of these transactions. So we're going to come in here now, we're going to choose what bank account it's going to go into, the date that we're depositing it, and then we're going to go ahead and save it. What that's going to provide for us now is it's going to give us the ability to see one transaction in our bank register for $11,375 rather than one for $1,000, one for $300, and one for $10,075. If you did not do this, and you put it into the checking account, again, you are just going to have that one transaction by itself. Now, one thing as a caveat to that statement, if you deposit your checks through remote deposit, so you pull out your phone and you snap a picture of the check with your phone, remote deposit deposits things individually. So you can, if you're going to be remote depositing a check, only if you're remote depositing a check, you can go ahead and deposit it directly into the checking account. But that is not a recommended practice, as you may screw up in the future if you go and deposit multiple checks directly at the bank, or if you deposit cash or something like that. So the recommended practice, the best practice, is to have it all go to undeposited funds, and then once you take it to the bank, then we go ahead and we record that it was deposited either by itself or with other things. Another thing that you can do is when you go to the bank with checks or with cash, you've got to have a deposit slip. So we can go ahead and we can select everything that's going in, and then we can come here and print a deposit slip and a summary. And so what it'll do is we can have a deposit slip up here, and most banks will give you something that you can take and put this on it, and it'll break down what you're depositing, how much you're depositing, when you're doing it, everything like that, so that you can just take this direct slip of paper to the bank in order to deposit it. You don't have to fill out the paper at the bank or anything like that. So that's really the best way to work with everything. Now, if you're working with outside apps and they're trying to do a bank deposit, or you're finding that you're missing bank deposits or something like that, the first thing to do is to find the invoice, to find the transaction that payment was made on. And we're just going to go, I'm going to go to one of my recent invoices. So we want to go ahead and find that transaction, and that's a bad example. Right there, there we go. Open up for me. There we go. We're going to want to find this invoice, and then we're going to want to see any and all payments that were made on it. You can do that by looking right up here in the top right corner. We can click this one payment made, and it'll show us right there. Once we click on that, we can see our deposit to account. So if this deposit to says anything other than undeposited funds, and you're having an issue making a bank deposit because of multiple transactions that may not be in your bank deposit screen, this is where you want to come in order to change it from your checking account or other account into undeposited funds and track that money coming in correctly so that you know exactly when, where, how the money's moving, and everything like that. The big benefit to this is we're tracking when you receive that money as a payment, when you're depositing that money as a bank deposit, and then also when it's coming into the bank. Because when you receive the payment, you don't always deposit it immediately. So we want to see that time in between, as even if you're just depositing one check, it's helping us follow a paper trail and helping us track everything. As always, guys, if y'all have any questions or anything like that, please don't hesitate to give us a call, shoot us an email, anything like that, and we will be happy to work with y'all. Have a wonderful rest of your day.